Welcome to Drill Down Earnings. We have quarterly results from Applied Materials. AMAT is both the stock ticker and what I call this thing when AMAT comes to mind. In fact, I was down there at the company just yesterday, so why not? Well, look, this is the business story about one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And Applied Materials is such an important company when it comes to making the equipment that makes semiconductors. So we would think it's very important at this time of semiconductors booming, thanks to AI and everything else. Wall Street just looks at a beat or a miss. They get confused about what these companies do. And while this was better than expected results slightly, the guidance was worse, so let's dig into it. $7.05 billion in revenues, it's up 5% on a year-over-year basis. It's nice growth for this company. Better, not quite as much growth as they had last quarter, but better than the negative numbers they were putting up a year and a half ago. And as the revenue growth has returned for this company, so have steady operating margins, 29% operating margins for this business, very strong. When we think about this business, so obviously they sell semiconductor equipment to make semiconductors of all kinds. They also have a big services business, and they are reliant on that 23% of revenues in this quarter because that supports their businesses in good days and bad. And these were reasonably good days. The equipment sales are improving. Equipment sales up 6% on a year-over-year basis, and that's good for this company, again, because those numbers were negative even into the last fiscal year. Part of the recovery here is the DRAM business. It's very volatile, but on a sequential basis, it was about flat, which is better than we saw last quarter. Their foundry business also about flat, but general small improvements here. And as a percentage of revenues, foundry, which is a more profitable business, is great, but DRAM, an important chunk there as well. The big issue, though, and the reason the stock sold off probably is the guidance. I think that a lot of people in Wall Street expected a big recovery here for Applied Materials. They didn't get it. The suggestion for next quarter, the guidance for the next quarter, although the range is quite big, $400 million in either direction, but only 7% at the midpoint. And that was a disappointment to Wall Street. As a result, the stock sold off. The stock was down 9% in after-hours trading and kind of settled out the day, the next day's trading, in that negative 9% place, which means the stock is only up for the entire year 9%. When the stock is up, when the market overall is up about 30%, a lot of that driven by technology. The thing that I look for so much for this company is what's going on with China. We know that because of import controls and concern about Chinese dominance in semiconductors and military and everything else, that the US and the EU have limited the ability of companies to sell high-end equipment to make the greatest semiconductors in China. Also, the sale of those semiconductors as well, manufactured elsewhere. But their other thing, the thing that Applied Materials calls ICAPS, which is Internet of Things, Communication and Automotive. They're sort of not the smartest chips out there. But China looks like it's made a decision because they can't dominate the business of AI chips and powerful graphic processor units. Instead, they're going to try to dominate the business of the more run-of-the-mill chips, the ICAPS, if we want to use the AMAT words, so many acronyms, but the less advanced, but still foundationally important Internet of Things, communication, and automotive chips. So what's going to happen with the limitations on China, and what does it mean for Applied Materials? That question was put to AMAT's CFO, another acronym, why not, Chief Financial Officer, Bryce Hill was asked on the conference call, how are you going to grow in China if you can't sell, the DRAM business maybe isn't growing as much, and you can't sell the most powerful chips because you're limited on being able to sell those, the leading edge. What is left for Applied Materials? Here's Bryce Hill.
I think that most of the variability for us will be based on the health of the ICAPS market in China. That's the vast majority of our business right now. We have served most of the DRAM and NAND business that we can serve, and we can't serve leading edge in China. So most of the vast majority of the business is ICAPS, and it'll just depend on how that ICAPS market evolves. Earlier, I shared that there's a couple of signals that say the rate of investment might be slower. Those are higher inventory positions and slow end markets that are automotive, industrial, image sensors, and analog are markets that are slower. But having said that, our Q4 and Q1 outlook is still strong for ICAPS across the world, and so we'll just have to see how that matures. We do expect customers to continue to add capacity over the medium term.
So ICAPS, maybe there's hope there for China, but maybe less of that in the future. That seemed to be the suggestion, and maybe that's why the guidance wasn't as exciting That's what Wall Street wanted. I do want to point out a Wall Street thing. It's a finance thing, but I think it's kind of interesting. This company has taken, during this downturn in the last 2 years, and as things are now starting to pick up, they've invested a lot of money buying back shares, which has increased earnings per share. And if you want to look at it over the last few years, if they had held the share count, forget about the share issues, if they had just kept it flat from where it was at the beginning of 2001, the earnings per share would be a lot less than they reported this quarter. In fact, earnings per share was 12% better because of the buybacks than they would have been over the course of the last 3 years. So buybacks helping earnings per share and putting that money to use for Applied Materials shareholders. But what's the drill down takeaway, the one number that tells us a whole lot that we want to remember about this quarter? So fourth quarter 2024 earnings from Applied Materials, yeah, $7 billion in revenue, that's great. 5% increase in revenue, that's great. 7%, maybe not enough for guidance, whatever. The most important number to me is 30%. 30% of revenues this quarter came from China. The question is, what's that going to do in the future? That may determine the future for Applied Materials. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.